All right, what's going on, everyone? The market is at a point where it is just screaming at us right in the face. In today's video, I'm going to go over exactly what the market is trying to tell us and the most important things to be aware of right now. Now, we're not going to waste any time either, so let's get right into it. Looking at the S&P 500 right now, it's at a weird point. You know, we saw a ton of selling pressure the other week with the bank disaster, but at the same time, the past couple of weeks have been really good and it's been very bullish. But we're actually in a very weird situation where we actually have some of the most powerful and just, you know, leading stocks, like the top stocks in the market that are actually to a point, and it's weird to even say this, where, you know, we have like a company like Nvidia or Apple that are actually to a point where they are closer to their all-time high than they are to recent lows of, you know, the beginning of 2023 or even, you know, the end of 2022. That is very weird to say, especially considering that the full like economic situation has not gotten any better, and arguably it's gotten a lot worse over the past 1 to 2 years. But it's like at the same time we have, you know, stocks like Apple that are twice as close to making a new all-time high than they are of recent lows basically in the beginning of 2023. And don't even get me started on companies like Nvidia either. I mean, over the past couple of months, Nvidia basically went from $108 all the way up to, you know, basically $280, you know, and the all-time high is only around $350. So it's like we're seeing insane runs, and honestly, the news isn't even that good, right? So we're stuck in a weird situation where it's like, you know, the economic situation is but stocks are not treating it that way, right? And we're actually seeing some pretty bad things go on in multiple different sides of the economy. But one thing that is very unusual over like the past week is we're actually seeing crude oil prices rise quicker right now than they have in quite some time. So basically OPEC Plus came out and said, hey, you know, we're slowing down, or we're having some production cuts, right? So that's going to make less supply of oil, and, you know, of course, assuming demand is the same, prices will go up. And what's interesting is this is all coming about at the same time as, you know, everyone is so focused on inflation still, and, you know, if we're going to see more rate hikes or not. As we all know, inflation has been like the data point to look at for the economy. And it's like if inflation doesn't slow down, we're going to have a very bad problem. And we're at a point right now where it's like the market is actually pricing in there to be no more rate cuts, or no more rate hikes, I should say. So basically the market is pricing in, I'll show you right now, just the Federal Reserve to just keep rates where they are for, you know, a couple meetings, about 3 meetings, and then eventually start to lower rates as we get into September of 2023 and then November and December, right? So it's like, the thing is though, is like if inflation goes up, then that's not going to be the case. They might keep hiking rates even more and more and more, right? And that necessarily would not be a good thing for, you know, the stock market, especially some of these, you know, stocks that are up over 100% over the past couple months. And the thing is though, it's like, all right, everyone's actually wondering, are we going to see inflation, you know, come down to the levels it should be at? And it's been showing signs of improvement, but the thing is, you know, when we see oil prices moving like they are, you know, a lot of people are asking themselves, like, all right, you know, oil over like the past couple of weeks, crude oil went from like $65 a barrel up to $80 a barrel, right? It has recent highs of around $130 a barrel that it made basically a year ago in March 2022. So it's like everyone's asking themselves, like, all right, is this crude oil jump just going to be like a fake out, or are we going to see crude oil, you know, maybe slowly drift up to, you know, $90 a barrel or $100 a barrel or, you know, $120 a barrel, right? And the thing is, if that's the case, guess what's going to happen to inflation? Inflation will just, you know, rise even more, and then guess what the Federal Reserve is going to have to do? They're going to have to hike interest rates even more, and then guess what that's going to do to the stock market? I'll give you a hint, it won't be good. So it's like we're at a weird situation right now where we have a lot of craziness going on and a lot of uncertainty. And there's one thing that is more clear than anything else, right? And it's not necessarily, you know, the S&P 500, because we're seeing a lot of mixed signals with that. It's not crude oil prices, and it's not, you know, these big tech stocks, whether it be Apple, Nvidia, or anything like that. It's actually the safe haven assets. And I know it sounds super boring, but stick with me, right? over the past couple of weeks, we have seen larger inflows and larger, bullish momentum out of like gold and silver and some other safe haven assets than we've seen in a long time. So what does this mean? If we're seeing gold and silver prices pop up in a major way, and we're seeing, like treasury yields fall down, that is literally telling us that, hey, the big money is buying these things up. We would not see gold prices moving like they are if there was not some serious buying pressure. But why? Why are we seeing so much buying pressure going to gold and silver right now? There are a lot of reasons, but there's a lot of uncertainty. It's as simple as that. There's a lot of uncertainty. It's hard to justify buying Apple or Nvidia after they doubled over the past two months or past couple months, and the economic situation isn't even that great. At the same time, it's like, there's a lot of things going on in the world right now that are not necessarily good. Of course, we have the Russia and Ukraine situation, but the dollar has also seen some very worrying signs, across the entire world, whether it be between Russia and China or India or I have actually seen a lot of bad things just happen with like the dollar, petrodollar, you can say, over the past couple weeks, and it's not a good sign. So what does that mean? People buy gold. When you're uncertain, you buy gold because it's been like the safe haven asset for thousands and thousands of years, and realistically, it's not going anywhere anytime soon, right? So basically what we're seeing right now is people rush into the safe haven assets like gold and silver. So look at GLD and SLV. They have been amazing, absolutely amazing to day trade over the past couple weeks, and especially the past couple days. But what's so great about, trading GLD and SLV or just gold and silver, even if it's the futures, is that a lot of times they offer some really good price action intraday for like day trades, but also they're very good to swing as well. And at the same time, it's like, it's not, it's not the worst thing in the world to hold them long term either. So it's like, if you have not been looking at GLD or SLV lately, I very strongly recommend it. I've been talking about these two for longer than I can remember, and especially over the past couple weeks, I've been talking about them quite a bit. So please look at them. They are booming right now, and we're at a point where it's like, a lot of times most people are just like too late to the party. So for example, like if we look at, like BBBY, right? This was a hype/meme stock back in 2022, right? It exploded up in a very giant way in August of 2022. At the beginning, the stock went from like $4 and it went up to like $10, right? So that was a nice move up. And then it went from $10 up to $20. And it went from $20 up to $30. But the thing is, if you look at the volume, you can see that most of the volume actually came in when it was just too late, So it's like most people only jump in like a trending setup after it's too late. And I think with gold and silver, if we really zoom out, I still think we're in the early stages of a run-up. And like I said, like even if you're willing to hold gold and silver for the long term, that's not a bad thing at all, especially, especially given the economic situation that we have. So I very strongly recommend looking at gold and silver, and not too many people know about this, but if you go to GDX, this is actually an ETF of a bunch of gold mining companies, basically all in one. This move is very similar to GLD, but also slightly different. And GLD has been moving in a very big way over the past couple weeks. Some would say it's overextended, and in some ways they're right. But GDX, at least on the charts, is not as overextended. So consider checking this out as well. But over like the next couple weeks and stuff, we're about to see a lot of stuff go down. Of course, we have the next interest rate decision on May 3rd, and I think this is going to be very interesting and very telling, because for the first time in a long time, we have the market completely disagreeing with what the Federal Reserve is actually saying about interest rates. So that's going to be a huge meeting on May 3rd, and at the same time, we have earnings season creeping back up again. We're going to see these bank stocks report earnings pretty soon. JP Morgan is expected to report earnings on Friday, April 14th. If we look at like Bank of America, they're expected to report earnings on Tuesday, April 18th. And then we have like Netflix earnings and everything else coming up soon. So it's going to be a pretty event-filled next couple weeks. So definitely look out for that. Besides that, if you guys are new to the channel, make sure to subscribe. When you subscribe, you'll see my videos recommended to you more often. But besides that, thank you guys so much for watching, and let's have an amazing week.